Today, we're digging into Reliance Industries, India's biggest company, to see how one single event completely out of the blue can create an absolute windfall. So let's get right into it and break down how something like this actually happens. It's the question that kind of looms over the entire Indian economy. How does a company that's already a giant get even bigger? We're going to look at their grand strategy. And then, we'll see how a huge unexpected event is throwing that whole plan into hyperdrive. All right, so to really understand where Reliance is heading, you have to get their blueprint for the future. And it's all built around these four massive pillars, or as they like to call them, their growth engines. So here they are, the four big bets that Chairman Mukesh Ambani is making. First, you've got the legacy business, the cash cow, their oil to chemicals, or O2C division. Then there's the explosive growth we've all seen in retail and, of course, digital with Jio. And the big one for the future? A huge bet on new energy, things like solar and advanced battery storage. And this really shows you the sheer scale of what they're trying to do. I mean, look at these numbers. They're aiming for double-digit earnings growth, that's EBITDA, in their main energy business. A massive 20% plus expansion in retail, still aiming for huge subscriber growth for Jio. And then a jaw-dropping 75,000 crore rupee investment, that's CapEx, into green energy. That's the long-term game plan. But what happens when that carefully laid plan suddenly collides with a completely unexpected global shock? Well, for a lot of companies, that's a full-blown crisis. But for a giant like Reliance, one that's prepared, it's a golden opportunity. And that shock came from China. It sent this massive ripple effect tearing through the entire global energy market. Let's take a look at what exactly went down. So picture this. It's March 5th, 2026. Tensions in the region are already high. Then, China makes a huge move. It orders all its refineries to stop exporting diesel and gasoline. Why? To keep it all for themselves, for their own domestic needs. And the effect was immediate. The global supply of these fuels got super tight, almost overnight. Now, to really get how big of a deal this is, just look at this chart. China supplies about 10% of all the diesel and gasoline for the rest of Asia. I mean, taking a 10% slice out of the market isn't some small tweak. It creates this huge supply vacuum that somebody has to fill, and they have to fill it fast. So here's the bottom line. A supply shock like this always creates winners and losers. For the countries that depended on those Chinese exports, it's a massive problem. But for a major refiner with insane capacity like Reliance, this isn't a problem at all. It's a windfall. So how in the world does Reliance actually turn all of this market chaos into pure profit? Well, it all comes down to a simple term you might have heard of, the crack spread. To put it really simply, the crack spread is just the profit margin for a refinery. It's the difference between what they pay for the raw crude oil and the price they get when they sell the finished products like gasoline and diesel. So when that spread gets wider, their profits just explode. And that is exactly what happened here. With 10% of Asia's supply just gone, the price of refined fuels shot up immediately by about 5 to 10% on the international market. It's just basic supply and demand, right? And here's where it becomes real money for Reliance. That jump in prices translates directly into an extra 200 to 300 rupees of pure profit for every single barrel of oil they process at their gigantic Jamnagar refinery. Every single barrel. So when you start adding up all of those barrels, analysts figure this one event could boost the earnings for Reliance's entire oil to chemicals business by 2 to 4% in just the next quarter. For a company this big, that is an enormous financial boost from just one market event. So you can see Reliance basically gets this triple advantage. First, an obvious margin boost from selling fuel at higher prices. Second, it gets a domestic edge because it can swoop in and capture all the market share that missing Chinese imports left behind. And third, it can often buy its raw material, the crude oil, at a discount, which just makes that profitable crack spread even wider. Okay, so Reliance is clearly in a very powerful position, cashing in on this global mess. But let's bring it a little closer to home. What does all this mean for you, for an individual investor thinking about the market? Well, there are actually a few different ways you can engage with a company like Reliance, and each one is really suited for different types of goals and different levels of risk. Let's just quickly walk through the main ones. So you've got options. You could buy their shares directly, what we call equity, for direct ownership. For a more hands-off approach, you could go with mutual funds. If you want broad exposure to the whole market, ETFs that track the Nifty 50 are a great bet, since Reliance is a huge part of that index. And of course, for the really experienced traders, there are higher risk tools like options and futures. But look, for most people, the choice really comes down to one of these two paths. Buying the stock directly is great if you really believe in the company's long-term story and want that direct ownership. On the other hand, mutual funds and ETFs are just perfect for anyone who wants a more diversified, passive way to invest. That still includes all of Reliance's potential, but without putting all their eggs in one single basket. And that really brings us to the key takeaway here. This whole situation just shows you how incredibly volatile the energy sector can be. I mean, one political decision halfway across the world can change everything. But it also highlights how a company like Reliance is uniquely built to handle and even profit from that chaos. At the end of the day, for any investor, diversification is absolutely crucial. So that leaves us with this final massive question. You've got a company here that is profiting big time from a shock in the old world of fossil fuels, while at the very same time it's pouring tens of thousands of cores into dominating the new world of green energy. So, is Reliance actually building a totally unbeatable economic empire for the next generation? That's definitely something to think about.